what a day, what a week last week was. All right, it's Bruce from Targeted Wealth Creation. I wanted to thank all the new subscribers. I got a lot of subscribers through the weekend, and you guys let me know if I'm not covering something or not explaining it. A lot of people don't like the long ones, but I try to consider there's new people coming in and don't really understand how these yield max funds work. So I'll try and do the best without deep diving, but at the same time explaining the newbies. So let's jump in on COIN and CONY. That was the least exciting for Monday because their earnings aren't till 5/2 after the market. All right, so Monday's trading, we dropped quite a bit from 236 down to 218. So that was a 7.68% retracement. But honestly, it wasn't bad considering where we were on our weeklies. And we did better on CONY by only declining, 60% or so of that. So a 7.68% decline in COIN and a 5.36% decline in CONY. And the reason with that is these weeklies. Typically, that's what sort of saves it. Now remember, the weeklies, when you're running in a massive bull market and we've got these synthetics on, they tend to mimic the long stock performance of COIN. So if COIN goes up 20%, theoretically and pretty truthful is the synthetic will also go up that. But our weeklies get capped and they run by, but the weeklies tend to sort of act like a rudder. They keep us in the game when we're flat, slightly up, or we drop a little bit and they don't perform as poorly. We get to collect that premium. So think of the time decay. You're writing a call without it really being covered, right? You don't own the underlying. So every day in 5 days when you write it, it just declines. But if you run past it, you got to spend the money to buy it back. All right. So what did we do? We had some trades. So let me pop those up. So whenever they get new shares, when you see the small number, I mean, it's not that small a number, but it is small cash relative to, 17,000 that they hold already. So what we did on 429 is we bought calls and we sold short puts. And these are on our synthetic, right? That's that monthly piece. And down here, we tend to match it with the same number of contracts, but we do it on a weekly basis, and we're doing the week of 5/3 expiration, right? So let's go look at those synthetics, and those synthetics look like this. That's 260s. So we wrote the 455, and we had to spend only 423,000, right? Because we're well behind this strike price. We've got a 260 strike price, but we have time to get there. So we're 16% under with our close. But during the day, they spent $9.31 on the call because it's so far underneath, it doesn't have any value. And then the put tends to be expensive, but we're buying the call, selling the put in the synthetic. So that nets us about 1.5 million. So we get to actually, since it's a transaction that's in, we get to count that. So that shows up in our income. However, as we fall behind and don't catch up to the 260 yet, again, we will have 2 weeks from this coming Friday. So I don't even worry about this one at this point. We have an outstanding liability if we had to go close it of 78.2 million. But it's not uncommon to be that way in the synthetic. Okay, so let's go back to the April tab. The other piece of that interday was, again, these were the 455 on the buy, call, sell, put, where we pocketed 1.5 million. We also make money on this, and that goes right in. So we sold for $4.61 and change, 455 contracts of the May the 3rd, 255. So I'm going to remove this and show you that transaction. So here we are, contracts, the open price, the strike price, what we would do to break even. So we add 255 to 4.6 and we say we can go all the way to 259.61 before it starts costing us money. And so they hand us 209,000 and we add that to our gain for the month so far, and then that adds to our running total, right? So the other thing we did was add some shares. So we had like an 8 million change here. Let me make sure. Yeah, that's what happened. So we had an 8 million inflow, and a lot of that happens when people buy into the shares. So I'll show you what happened on that, but that helps us. But again, that synthetic liability, it's only a book loss. That needs to get cleared up in the weeks after 5/3 or maybe later this week on earnings. I'll talk about that since that's still outstanding. So let's look at what it looks like on our cumulative weekly calls. The good news is we dropped way down, right? I mean, it's not good, but it's good for the weekly. So by going from 236 to 218, the likelihood of exceeding these calls is less likely, right? So 3 of them, which is like 18,500-ish, something like that, like 18,007 or 800. I could have just lumped this number into one, but I left it in 3 pieces. All of those are almost 17% out of the money. So they don't get to the money till the 255 strike. We don't get to 255, we collect all that premium even though we already counted and collected all that money. We get to keep it. So here's our 250 that's only 365 contracts, right? So that constitutes the 19,120. So these two were down. I think this number went to like 97.83. So we moved up slightly on our implied volatility here, and we like that. That's where we get to keep big. Now what's interesting, this week I updated the chart. Let's take a look at it. So we want to break out of these parallel lines, right? We've got resistance and we've got support, and this is commonly called a bull flag, right? Like a flag waves in the wind. It's got a pole here, and typically they break out, right? The probabilities favor it breaking out of resistance, but that doesn't mean that it can't, right? It might be a 60-40. So what we look for is volume. We haven't gotten volume. So to me, the big decider is going to come down to the close on 5/2, right? They make the declaration on the morning of 5/3, and they have a meeting on Tuesday on 5/2, the management team, to decide what they want to pay out in every EOMAX fund. So when we look at our numbers here, not much change from what I did over the weekend, but I'll tell you a few things. So we did very small volume. So until we break out, this is just consolidation. It's just, muddling along. So the fireworks are likely to be after Coinbase reports earnings. And to me personally, based on everything I've read and listened to, probably a 65 to 70% probability that they beat the estimate. Again, this is not financial advice. I'm not a financial advisor. I'm just telling you things I read, listen to. Always consult your own financial advisor before making financial decisions. All right, so let's move through this. And let's make sure I covered. So we talked about the cash, not a lot changed. Let's talk about the share count and what happened there. So we'll take our holdings. So 275,000 shares. Okay, it's 1.6% of the share base, right? So we went from 217.225 million to 17.5. So it was 1.6. And what happens typically is we get closer to these payouts, people go, oh yeah, I've got a couple hundred shares, you know, it's going to be $2 or more, so I'm going to buy some more. Well, that has a negative impact in a minor way that there's more shares to pay, right? So they have to look at the share count on the evening of 5/2 and take that into consideration, and I'll show you, in my opinion, how the analysis is really done. The other thing that's happening is we're elongating, right, this synthetic. So we were around, we had a 60 million liability, and we traded up and we dropped that to 40 million. And the last 2 days we've been declining, right? So that liability gets bigger. But again, I'm not really worried with 2 weeks. This thing can really move. Now, also on Thursday, so let's go out there. So the close was 2401. The NAV, which is calculated by taking all of the current assets, cash, positions, and you divide it by the number of outstanding shares, right? And that gives you your NAV price. And sometimes we trade to a premium like this. We've got a 7-cent premium. Sometimes we trade to a discount. So on the payments tab, the real key stuff here. All right, so we're still looking like, because this number goes up, right? I think we were 183. So we had a small little bit of revenue here. Let me make sure these are up to date. F14 on our synthetic, because sometimes, yep, we're up to date on that. This number doesn't count, right? But this does, right? This gain here on F14, we do get to collect that money. And let me look on the short call. I'm sure that's also there. 28. Let me look. So we want to be at 28. Sure, April 28. Okay, gain or loss. All right. So we're all, everything is square. So $1.81. So the reason I say $1.84 to 241 is, first off, they almost always pay out this number if you aren't carrying a big debt, and MSTY is, right? MSTY got killed over here on its synthetic earlier, so they're not going to get all of their short call income. CONY will, and they've got another, so what you do is these are the, this is a total income. It's really a positive number, $3.11 per share. But $1.81 is the amount that they use a lot of times as their guideline to pay out. But since we had a carry forward here and we're doing well, I think they're going to go into this a little bit, right? So it's $1.30 setting over here in this number, and this number is $1.81, right? This is our synthetic. And we have a big loss also on the books, but it doesn't count. It's not been officially a loss. So I see us somewhere between paying this at 100% and taking a little bit out of here. That's a guesstimate at this point. If they want to give us 60 cents of that $1.30, it would be up at 241. If they want to give us 20 cents, it's going to be like 201. I think they'll do $2, you know, so realistically this is probably $2 to 241. But I wanted to put what they could do, which is $1.81, $1.84, and go all the way to 241. They're not going to do 311. They're not going to do $3. Okay, so fair enough on that. Let's jump into our next one. Let's get MSTY up here. So here's MSTY's intraday. They also had some shares added. So let's get the other piece of MSTY. This is our main sheet. So what happened? So Mr., and this is, make note of this, guys and girls. We closed at 1292. Earnings were announced, 20 minutes after the market closed. And then there was a call. So the initial, And to be honest, MicroStrategy is reinventing itself. If anybody doesn't know Michael Saylor, I mean, he's a brilliant, literally an MIT rocket scientist before. But the guy is just extremely bright, can explain Bitcoin in a way that I've never seen anyone do it. And it probably takes 50 hours to just understand what it really is, or maybe 100 hours of study, and he's able to discuss it, I think, brilliantly. Anyway, they've transitioned MicroStrategy from just a business intelligence piece of software that was getting killed by Microsoft for years. And so they put, which is commonly known, all of their treasury, all of their cash from their business into Bitcoin. And it was a massive bet a number of years ago. And that's paid off. And so today they own more Bitcoin than any other corporation in the world, any other single person in the world, and it's billions and billions, okay, of their treasury holdings. And they're actually doing fairs and conferences where they're trying to teach some of the other CFOs and other corporations, because the story is that fiat currency, right, erodes. Anybody go back and look at the dollar from 1913 when we created the Fed, and they've wiped out 99% of its value, and yet the dollar as a reserve currency is outperforming literally every other currency on the planet because it's given that reserve currency status, right? But our enemies and a lot of other countries in general don't like that and are trying to form together to put pressure on the dollar. That wouldn't work except for the fact that our GDP to debt, or debt to GDP ratio is 130%. But look at Japan, theirs is at 250%. They're not the reserve currency, and the yen got killed. Well, without getting into all that, so I'm very pro gold. I'm very pro Bitcoin, right? And sometimes in either one of those camps, you get people hating the other side. I see both of those having a place. So anyway, without giving you all my geopolitical and the rest of the stuff, let's just jump. And we see that what happened here, this went up 83.83% of 1%, right? This went up $1.36. So we outperformed on on MSTY over MicroStrategy. But again, what happened after hours when MicroStrategy announced earnings? Again, earnings are dinky for them. They're transitioning, they're doing a lot of crypto kind of tools and pieces of software that help in that transition that it'll take over the next 10, 15 years to become, if you will, digital money, digital energy. So they're small in their revenues in that aspect, although they're doing a lot of consulting and stuff. And so their earnings weren't terrific, right? And yet their holdings and all of their money and their other strategies are brilliant. So the market reacted negatively and took them down to like 1150 at one point. I think last I checked, they were trading around 1220. Right? They had gone up when they had the call back to about 1260, but I'll check. They're around 1230 last I saw. So I'll pull that up while we're here because I think it's important for you guys to know, right, what's happening in that. But I think they're going to recover, and I don't see a massive problem with that. But I wanted to make you aware of that, right? So you see a close price, and then an all over the map. I didn't see any kind of volume. Let's go out here and look at our weeklies. So here's our weeklies. We added this. So in this looks like we're relatively close with 4 trading days to go. But the reality is this 1292 may be at 1230 when we open. Let's see how the market handles it, because after market, anybody that's traded after market, it's thin volume, right? So let me type in a symbol while I'm talking about that. Let me start up my Thinkorswim also. Okay, so implied volatility didn't change a lot. This one needs to be updated. What number? 35? No, 3273 is right. Okay, so on the chart, nothing outstanding here, right? Volume wasn't particularly heavy. Now, sometimes in earnings, let's see what it is today. Does it get beaten down on big volume? Then that tells us we could break down here, right? I don't think that's the situation, but we'll see. So we're riding in the middle of this bull flag, right? We want to avoid going down here and breaking down, and we'd love to see it break out the top. I mean, for our payday, I would like to see us stay below these. I mean, we could go, well, the bulk is right here at 1380. So as long as we trade up to 1370, okay, no big deal. And if we drop for a day, I don't see that as a massive undertaking as well. So let's go to payments, or let's take one look at holdings. So here's your 125,000 shares added, 403. I'm showing us trading 8, but again, this is based on the previous close. I'm showing us 8 cents above the NAV price calculation based on shares and assets. Okay, let's look at our payments. So not really a lot changed. We've got it. Normally, this would be a great, if this was a negative number, right, which means they had positive money here, these do in reverse, right? So this is our short call income, which constitutes $2.79. Normally, you can count on 100% of that being paid, but that doesn't happen when you take a big $33 million for them loss in their synthetic previously. So they're carrying that. Now this 6 million on 3 million shares, they had a $2 carry forward, right? But with a 750 loss here, I've been using 67% because I've seen that play out. So that gives me on this number the $1.86. So I'm saying realistically, you know, we do have 11 million positive. When we go over here and look at these holdings, right? This is our synthetic. I mapped it. We were at 8 million profit, then we went to 10, and now we're up to 11 million. Unlike CONY, right? CONY's got all this win in both of them, but they've got this book loss. Well, they don't care about a book loss, but they care about a real loss, which MSTY already took. But they could kind of say, okay, you got 11.4, we're definitely going to pay you 100% of this. Nah, maybe we'll take you to $3, right? Or sorry, maybe we'll give you 75% of that, right? So maybe we'll get a 215 or 220. I'll tell you, they're really going to assess. This is a tough one, but if I had to guess, it's somewhere in this 186 to 211. So I'm sticking with what I had, and I'll keep you guys updated on all that. I don't want to keep you any longer. Okay, so again, this is not financial advice. I'm not a financial advisor. Have a great one, guys, and let's hope that we hold most of the gains that we have and don't sell off on MicroStrategy. A lot of that has to do with how Bitcoin holds up. All right, see ya. Bye.